Hi guys. I think that can you hear me, guys? If there is no sound, I think there's a test sound problem. Just let me troubleshoot my sound. Just a second. Let me just check. Let me just check. All right. Okay, we are on. All right. Hi, guys. This is Meng Hon, your host for Traders Talk, and we're running a little behind. All right. Hi, guys. Let me just off this now. Yeah, we're running a little behind. Of course, it's a rainy day, and you guys know that in rainy days we always have jams in Kuala Lumpur. Okay. I'm back from my holiday break. A cool 1 week holiday. I hope you guys are fine. Without because we did not have a show last week. We took a break. And of course, market was not too bad last week. First half of the week was down, and second half of the week we had a very green days after Wednesday. Yep, after Jay Powell's speech, of course the market has actually boosted all the way up back to the previous week's high. Okay, all right. So if you have just joined me, welcome to Traders Talk. This is the show where we talk about everything about trading and especially in trading of options for the U.S. market in particular. All right. Okay, so as usual, we do the show in two sessions. The first session we actually do the what is that? The market updates. The market updates where we actually speak a bit about what has actually happened in the market last week, and what do we expect? What do we expect in the current week, so that this can give a bit of guidance for you guys who are actually trading or having positions, whether to exit, whether to keep your trades on, right? So it's actually a good insight to actually have some so-called trading buddies to actually trade alongside you, and also to actually share views about the market. All right, good. Okay, so the topic of the show today is what's that? Let me pop it up again. What they have put? When good news is bad for the market. Most of the time, good news is actually good for the market, right? But nowadays, it seems to be a little different. When good news comes out, right, it is actually bad for the market. Okay, and sometimes when good news comes out, it is actually good for the market. So I mean, as a trader, I mean, sometimes we also get confused whether we actually expect to have good news, or whether we actually expect to have bad news, which is actually good for you to trade. In the past 1 year, right? In the past 1 year, in particular, these few months, right, it has been increasingly difficult to actually project what the market wants to hear. Yep. And of course, last week itself, there was actually, in fact, last Friday, last Friday, I think that there was actually a jobs report, right? Jobs report, and of course, the jobs report. The market continually added new people onto jobs, right? Means that new people get to work. And I think last week itself, there was about 260 over thousand addition to the non-farm payroll. Yep. That means people who are non-farmers, non-farmers going into work. Yep. So of course, when people actually get to work, right, it's actually good news, right? When there is actually people working, and it's not a negative figure, it's actually a positive figure. So more people get to work in the US economy. And of course, once the report came out, I think it was about 9:30 p.m., right? 9:30 p.m. The futures started to crash. by I think it was 200 over points for Nasdaq 200 over points. Yeah, and of course you find that why when people get jobs the market crash. Okay, so you got to actually understand, and of course if you are following us on Trader Stock, right, you would probably also know, right, some of the key things that the market is actually expecting. And of course, one of the key things which the market is actually expecting is to sizzle down the economy, to actually sizzle down the wages, and of course, when the economy sizzle down means that there would be actually less jobs. Yeah, so when there is actually less jobs, and when wage comes down, then of course that is actually a sign to actually balance or counter off the inflation. Of course, when the salaries and wages goes up, right, then of course that's where it causes inflation, and that has actually been happening for the past one over years, and inflation went all the way up to about 9.1%, and at the last report, inflation was about 7.3%. Yeah, that was actually released some weeks back. Yeah, so of course, when I say when the report came out that there is still positive people adding to the job market, means that the economy has not really sizzled down. Although a lot of corporates have actually said that they are actually cutting jobs and all, so the effect have actually not kicked in. That means the net reduction in jobs is less than the additions into the market. Yeah, of course, mainly because a lot of sectors, like service sector, some of the service sector, the travel industries and all, has actually been doing quite well in post COVID, right? And of course, a lot of people are actually getting back into that sector of the market. And the sectors which are actually reducing employment are mainly the tech sectors, and starting right now the banking sector. And of course, why the banking sector also starts to lay off their employees is of course mainly because of the effects of the high inflation rates. And although it's actually good for the interest rates, the bank actually charge more interest, right? On the other side of it, the loans, where actually people take home loans, those numbers would actually be lower. And of course, when those numbers are lower, then of course you would need less loan salespeople to actually service you. So yeah, so good labor data is actually bad for the market. Yeah, so that's why when the labor data came out more positive, the market actually crashed. But have no fear, there are still a lot of people in the market who actually how to say, uh, who is actually waiting waiting for all these dips and waiting for all these crashes. And of course, if you have seen the market last week, what has actually happened is that let me just share the screen. What has actually happened last week was that after the crash on Friday, right? The market has actually fully recovered, fully recovered. Yeah, and I will actually show you how so far how desperate is the market for such kind of dips. Let me, where am I? Okay, let me share the screen. 1 week, I have not done this, right? So a little rusty. Okay, all right, no problem, no problem. Okay. Okay, you guys see the chart, right? Yeah, okay, you guys see the chart. This is, let me just go back to SPX. Yeah, okay, the key data which we actually see is the S&P 500, right? S&P 500. But actually, I more like, let's do the Nasdaq first, right? Nasdaq, and the Q. Maybe we look at the no, and we look at the real data, we look at the futures because when I actually want to explain what has actually happened last Friday, right, it's actually better to look at the futures. The chart is small, right? Let me just make my space smaller. You don't need to see me, right? Okay, so this is good. This is good. Okay, close this. Okay, this is the Nasdaq futures, and let's go to the let's put the 5 minutes time frame. Okay, 5 minutes time frame. We go back in time. We go back in time. Okay, here's here. We go back in time to Friday to actually see what happened when the jobs report came out. Okay. Okay. This was Friday. Yeah. So if you look at here, right? If you look at here, okay, look at here, Friday, actually it was here. Yeah. So Friday, the price was actually here. This was actually about 8:50. Report came out in 9:50, right? So let's see the the excitement on Friday. So it was just trading around here, hovering, was going up all the way very nicely. Yeah, and suddenly coming to 8:30, right? Coming to 8:30. This was 8:30. Report came up. Boom. Okay, so that was what happened last Friday. It was actually a huge drop, and of course, if you look at how much was the drop, right, it was actually quite significant for that time. It was almost about let's say from here to here, it was almost about 2.5%, which is about 300 points down. Okay, but of course, if you look at it, right, the report came out, it was positive. The market sold first, sell first, sell first, don't talk. Yeah, sell first, don't talk. And of course, once it hits during this time, only probably about less than 5 minutes, right? You can actually see that market quickly recovered, and all the way to closing, right? All the way to closing. That day itself, we had actually came back almost to where will be here, here, yeah, all the way back to the top here. Yeah, this was actually closing was actually somewhere here, the Monday, yeah, somewhere around here. So of course it reached back to recover fully, but of course towards closing it sold off a bit. Yeah, so that was how the news actually influenced the market that day. Not only that day, I mean, basically a lot of. I will show you another incidence of what has actually happened, right? When the Fed Jay Powell came out on his speech. Yeah. So this was bad news. Good news. Market down. But subsequently, it actually recovered fully. And of course, there was another event on Wednesday. Yeah. So it was here. A smaller one. I think this was actually, was it here? Here. Thursday. No, it was. Let me see. It was on Wednesday 30th. I think Wednesday trading day 30th, which is I think about 2 or 3 a.m. I think it was here. Yeah. So what has actually happened was Jay Powell came out and gave his speech, and he says that it may be likely that they will actually slow down the interest rate hike to 50 basis point at the next rate hike next week on the 14th of December, from the earlier 75 basis point hikes for the past four rate hikes. Yeah. So of course that gave a bit of life life and also hope for the market. Because that actually starts the Fed pivot, where basically they put on the brake, not the full brake. They pressed on a little bit of the brake to actually slow the momentum of the rate hike, and that actually gave the market another boost to the upside on Wednesday trading day. Yeah, on Wednesday trading day. Yeah. So again, we would continuously see this kind of news. In fact, actually, yesterday itself, there was another another release. I think it was manufacturing index of price. Yeah, but of course, that only impacted for a small time. That was also positive news. That was the impact was actually not that big on yesterday itself. Yeah. Okay, so let's get back to SPX and see the daily chart, right? Daily chart. Yep. So be careful on such kind of release, especially next week would be a key release on CPI. CPI on 13. 13 is actually Tuesday itself, 13, and then on the 14th, then it is actually the Fed rate hike announcement. Yeah. Let's double confirm. That is what is that? On the calendar, right? On the calendar. 13 next week, right? 13 next week. I think this week probably not much. There is actually a PPI. This is actually the production index. And then I think on the 13 is the CPI. Yeah, CPI at 9:30 p.m. This basically is before market opens at 10:30. Yeah, of course, if you want to actually trade or scout this, then you can actually do it on the either on the futures, options. You can actually do on the Nasdaq, which is MNQ, or that's mini futures because it's cheaper. I mean, of course, if your account is bigger, you can directly trade on the NQ, which is the Nasdaq futures, or the ES, which is the S&P futures. Of course, if your account size is smaller, then you trade on the minis. Yeah, the minis, and the mini future MNQ for Nasdaq and MES for the S&P futures. Yeah, so that's how you can trade either options or the futures directly. Yeah. Either one will do, but of course you need to know how much is the ticker move, and also per tick how much is the values. Yeah, before you trade, otherwise you trade wrongly, and basically when the market moves 1 point and you see the P&L move by 100 plus minus, then you go into a heart attack. Yeah. Okay, make sure you know what is the tick size. Yeah. Okay, so next week, these are the two key news, and of course the CPI expectation next week is what's the expectation? CPI this month to month. No, close this. CPI expectation is how to close this minus. I know how to open and I don't know how to close. Okay, here X. Okay, 7.7%. Oh, 7.7% is actually quite high, right? I thought earlier last month itself was also the expectation was this, and the actual was 7.3%, right? The actual which came out was 7.3%. Yeah, this one here. Okay, so somehow or rather, the expectation seems to maintain at the early expectation, or actually inflation expected to increase from the current current levels. Yeah, current levels expected to increase. And of course, if it increases, then that's actually a very bad news for the market, and that's going to have a huge impact to the decision of the Fed, whether to continue the 75 basis point or start to actually press the pedal brake a bit to reduce it to 50. Yep. So that although they indicated they might slow down, but of course, if the data of inflation is not lower than what was reported last month, which was 7.3%, right? Then of course that would have a risk that the market would sell off immediately if they don't see any number lower than 7.3%. Yep, 7.3%. Okay. So S&P current level is at 3998. Yeah. So we were actually speaking on our newsletter. Yeah. So if you have not subscribed to our newsletter, do subscribe. We send it out every week on Monday morning. I try my best to actually issue it out on Monday morning. So we said that basically we want to actually see a few things for the S&P 500. The first thing is, of course, it needs to be above the 4,000 level. Yeah, if you look here, it has already came down below the daily. No, wait, this is one day. Yeah, daily 200 moving average. First thing is it came down. Yeah, of course, that means basically from yesterday itself, it did not how to say, it did not manage to continue to stay above. Yeah. Mainly the data release was taken negatively. It went down by about 72 points. Yeah, 72 points. And of course, that is one sign. That is one sign that this may continue to actually go further down. Yeah, continue to actually go further down. Because of course next week is a big day for the market, and since the market has actually rallied since October, right? October, almost 2 months, right? Almost coming to 2 months, right? And of course, with much uncertainty coming next week, then of course profit taking starts to kick in, and yeah, with this sign here, then probably the more people will start to actually risk on again, and start to actually stay on the side until they get a clearer picture of the markets. Yeah. So of course, if we are trading, then there are certain opportunities to trade. And of course, we need to just know what kind of strategies to actually deploy to manage our risk and the market uncertainties. Yeah. Okay, so so this is below 200 moving average. It also fell below the what is that, the 4,000 level. Then watch out, more tendency on the bearish side to actually continue to actually come down. The next level which we are actually watching on is around the 3,000. I would say 3,900 level, somewhere around here. Yeah. 3,900 level, to see whether it stands to support at this level. Yeah, that is S&P. And of course, if the market rebounds, which probably less of a chance for it to actually be rebounds significantly this time, then if it goes up, then of course the 4,100 and something like 20 or 30 level, this level here. Yeah. Again, firstly is to cross back the previous high here. Then if it crosses, then the next threshold is actually this one here, which we are actually looking at. Yeah, this one here. Yeah. Okay, so this is S&P 500. Yeah. So Nasdaq. Nasdaq, yeah, Nasdaq again, a similar situation. I mean, more or less nowadays, both markets tend to move around the same. Yeah. So again, yeah, if you look at last week, this was actually one threshold, the 12,000 level, where it managed to breach for a while, within a day. Then of course, subsequent, it started to actually come down, and of course, yesterday itself, it actually came down even more. Yep. So of course, the levels which we are watching is 11,500 level here. Yeah. On the downside, the next key support areas, right? Here, here is one. Yeah, 11,500 points. To see if this basically maintains the support. Yeah, the previous two retracement, right? Retracement, it managed to actually find support at this key level. Going to the upside is still a bit far. And of course, if you look at the overall charts, right? Overall charts, it's still looking on a downtrend. Yeah, it's still looking on a downtrend with mini rallies, mini rallies. Yep. So the trend is still looking at coming down, because it has not breached the previous high here. Yeah. Of course, if for the trend to actually change, firstly it has to actually go above this level on the week list. Yeah, above this level. Yeah, which is about 13,700. Yeah, 13,700. Yeah, to go above. Then of course, that is a chance for it to actually come down. But currently, it is still moving down with small bear rallies. Yeah. So this is Nasdaq, but of course, when the when the rate starts to slow down, when the rate increase starts to slow down, first step is of course it decelerates, reduces, yeah, from 75 maybe to 50, and then later I don't know, maybe 25, or even to zero. Yeah. So second step is of course maintaining to for a while at no hikes. Based on the data which they receive, they will have no hikes. Then of course the next one is to actually reduce rate. Yeah, reduce rate. This is actually, yeah, reduce rate. Once this starts to reduce, then of course that's the time where the market would tend to start to recover, possible having a recovery, mainly because the rate starts to reduce, things would actually start to come back. But that also takes some time, maybe 3 or 6 months for that to actually having a more sustained and positive change in the market. So I would say next year itself is still not going to be easy or all the way green market. And of course, depending again whether the Feds will start to do boo-boos again in terms of their policies, yeah, like they did when the pandemic came, right? They overprinted money, and then later they had to come to such a situation to sizzle down the economy again, right? It's like overcooking your chicken, right? And once it overcooks, right, it's difficult to actually reverse back the process to make it tender again, because overcooked chicken tend to be very hard, right? Not so nice to eat. Yeah. Okay. All right. So this is this is Nasdaq, and also the S&P. Yeah. So for this week, I would say uh maybe cool down a bit on positions, and of course the only, of course, possible positions which I also share with you, maybe some trade ideas later on, right? What to actually do. Let me just look at the futures. Just give me a second. Where is my Yahoo? Okay. Yeah, futures more or less staying put. The S&P futures -1. I mean, this is and Nasdaq is somewhere plus 12 or plus 12 right now. So it seems that people are waiting, waiting for indicators, waiting for news, whether it is good or bad. Then of course you go on the guide which I have actually shared with you earlier. Things that are how to say, that can sizzle down the economy, and inflation would be positive for the market. Things that will hit up the economy will crash the market. Yeah, so this is a bit opposite of what you would actually normally want for the economy, or even for the stock market. Yeah, and of course, I mean, let's wait till next year before I actually share with you what can actually happen next year. Yeah, because at every different stage, right, the market tend to actually behave differently. Okay, so before I left for the holidays, I did mention about some positions or some stocks, right? And of course, I mean, this like Visa, I mean, we did spoke about it. We said that currently possible oversold is actually coming down, and of course, it did actually, it did not move much from where we were last week, or somewhere around here, right? 214, right? So today is also about, it went up a bit, and then it's at about 213. Yeah. So of course, for those who have probably entered into strategies like we mentioned that they bear call spread, right? Bear call spread above the above the resistance level, probably your trade right now would be somewhat in profit. And of course, I would say if Visa continues to actually come down, which it is going to come down today pre-market 211, right, which is probably going to come down, then of course you would actually need to close the position, I would say, this week, probably by Wednesday or Thursday, close your position, take profit, whatever it is. Yeah, because to risk that coming to the CPI, and also to the rate hike, right, would not be economical. I mean, because you have already gone into a profit. Yeah, because your credit position would be plus now. You would buy it back at a lower price. Yeah, I mean, some other ones which went as expected was Visa. Mastercard was also more or less similar, right? They did not really move much. Then we spoke about Goldman Sachs. Yeah, Goldman Sachs. We did also spoke about Goldman Sachs to say that it's oversold position, and it's actually going to actually come down. In fact, yesterday itself, it came down about up to a max of about $10 yesterday, and I think at the end it came down only about $9. Yeah, yesterday. Yeah, so Goldman Sachs again, yeah, the positions which we had was also a bear call spread. Yeah, bear call spread above the resistance level on the topic here. Yeah, so all these are coming to profit. We will, and all the bank stocks are actually down. Bank stocks are actually down. What else did we cover on the this is the healthcare is still, I would say, is still topish, but a bit volatile for this healthcare, and many people are also finding shelter lah. Yeah, mainly finding shelter, and when the market is good, they move to tech, and market is not good, they actually move back to safe areas like healthcare. Yeah, and of course, the sector which has been so-called performing quite well for the past weeks is actually on the China sector. Okay, and on China, I think we also covered on China, right? And of course, one of the things which has actually pulled it back for years is actually on because of the COVID situation of the lockdown and all. And of course, right now, the situation is a bit more positive on that area. and mainly because people already going crazy, right? People are already going crazy in China, right? Because they are locked down too long. I mean, imagine if you are locked down. I mean, these are real lockdown. I mean, practically, if you get COVID, they would chain your door. And of course, the unfortunate thing that has also happened, some 1 or 2 weeks back, right, was actually some people actually got burned to death because their doors are actually locked by the authorities because of COVID and all. They can't go away, and few families actually have perished um, because of fire. So this has actually also caused a lot of protests in China, and of course, the pressure for the China government to actually ease off the lockdown is actually very high. And of course, once the people start to revolt, right, that will also be a big problem for the country, and also the stability of the situation in many of the China cities. Yeah, so that area is actually quite positive for the China stocks. And in fact, if you look at HSI, which is the Hang Seng index, right? Hang Seng index for the past one, two, this is weeks, right? This is week, right? Yeah, this is week. For the past 1, 2, 3, 4, 5 weeks, right? It has actually came from the lows of about 14,600, currently all the way reaching almost 20,000. Yeah, 20,000. So basically, it's about 25%, 25% up since. Yeah. So this 16,000 line was actually our threshold for the market to actually move back up, and from there basically we are plus about 3,000 points. Yeah, and once the confirmation of I don't think they will release immediately. They will start staggeredly, but of course during that time itself, they would start to be again cases and all this kind of increasing and all. So of course, I would say it will take time, but of course once they start to ease down, then of course the bullishness of the China and the Hong Kong market would actually come back. In fact, it has already started for a lot of stocks, right? A lot of stocks in the market, right? I mean, the common ones like Baba, which is Baba Ali, the Hong Kong side, both side, Hong Kong and also the Nasdaq side. Yeah, you look, Baba actually have recovered from 60 now to about 90. So 60 to 90 is basically about $30. Yeah, $30, which is actually quite a significant change. Yeah. Then of course the other stocks, even like the Tencent, you can also see it has actually recovered together with the overall Hang Seng side. What else? This is Hong Kong Exchange. Hong Kong Exchange also went up from 225 now to 330. Yeah. So of course, if you start to actually take in positions on the Hong Kong side, I would say take in a longer position. I mean, I'm talking about trading. I'm talking about trading. Of course, if you are talking about investing and whatnot, of course there is a higher upside to go, but don't expect it to come quick, because the first round have already happened here, up by 25% here. Yep. And of course, if it continues to go up, then the next level would actually be the 50% mark here. Yeah, if you come in, don't go on one shot, because as I said, it can be staggered, because like my friend have actually said, the China government can change policy every day. And the recent news, which was actually very funny, is that I think they said that actually COVID is not too dangerous anyway. Might not be too dangerous. That's what that's what they start to actually say, and probably used it as a reason to actually open back the whole economy. In fact, all the other countries, if you see, I mean, yeah, I mean there is actually a risk of infection and whatnot, but most of the other countries worldwide have already started to actually lift together with this disease, right? Live together with this disease. If you get it, then just take care of yourself, have vitamins, and drink more water, and try to actually monitor your situation. Yeah, so that's just what we can do, but we cannot hide ourselves and lock ourselves permanently and go crazy, right? So yeah, so this is actually on the Hong Kong side. Then the other ones like uh, JD. I mean, these are all the more popular ones, lah, and all the stronger ones. I would not want to talk about the how to say, the speculative. And JD went also quite strong from 35 all the way back to $60. And of course, yesterday itself, when the market was down, I think JD did not do too bad, lah. It was also plus 54 cents when the overall market came down by about 70 points for S&P. Yeah, even Daba itself was actually plus about this the Nasdaq market, right? Was also plus about 50 over cents, if not mistaken. On opening, is even much stronger, plus $1 over, but it came down to minus, and then later on it closed plus 40 or 50 cents. Yeah. So some of these stocks, yeah, trading positions would be, I would say, you can still do it. In fact, today itself, we also did some positions on the Hang Seng Index, on the option side. We also took some small long positions here. Yeah. But longer term, I would say 60 to 90 days would actually give a good time, and also a safer, how to say, a safer time decay, in case things does not go up immediately, right? You still have time, and the decay won't be so fast as compared you taking shorter positions. In terms of the decay would actually come quite fast if the position don't move. Yeah. So these are how to say, the positioning. I would say those positions on the US side, take profit before end of the week, before you reinitiate your position next week. And of course, during this week, while you have nothing to do, right? Then you can move on to the Hong Kong side, Hong Kong stock, China or Hong Kong stocks side, to actually take on some positions. Yeah. Okay, so we will actually do one how to say, we'll do one sample trade. I would say sample trade because this is actually not a trade recommendation. I would just guide you guys in terms of how to structure out a long trade, and on possibly some of these Chinese stocks. And maybe today I will just choose JD. And of course, today JD is going up by about $1. Yeah, but of course, once the market opens, we look at the position, whether you can actually still do how to say, still try to work out whether such kind of trades is actually workable. Okay, of course, from the lows to tops is already here. Then of course, once it actually starts to reach this level, which is about say $70, right? $70, it may again face some resistance. Yeah, but of course, $70 to from now is actually still another $10. This is 70, right? 68. Yeah. So here to here is probably another $7 to $8. So of course there is still some potential before it starts to reach some headwinds here. Yeah. But of course, because it has already rallied from here to here by about $30, right? $30, which is almost 100%. Yeah, which is almost 100%, right? Then of course, the downside risk, you will still have some kind of risk that on the downside, where it might actually retrace back to the 50s level, and of course, you need to actually see how to manage that kind of risk. And of course, with options, right, we can actually use advantage of options to actually mitigate potential move on the opposite side of where we actually intend or want it to go. We can actually mitigate or reduce the so-called price movement by using certain option structure to protect it. But of course, the other downside on using how to say, when you actually want to protect positions means that you would actually take on higher risk. There is no free lunch, right? There's no free lunch in how to say, in trading or in options. When you actually want to fix your risk, then of course you enter into a defined trade. But sometimes when you actually want to protect your risk, then you actually either take on more risk or take less profits. So that is basically the thing which you guys have to actually understand when trading options. Yeah, when trading options. Okay, so let's just go to the trade platform. Trade platform and structure out something which might work out here. Here. Okay, very fast trade, not very difficult. Let me share you the platform. Oops. Okay. Okay, can see. Okay, so this is the Tastyworks platform. Okay, if you're not familiar, familiarize yourself, because this is I mean, one of the main platform which I use nowadays. Okay, so if you go to JD, if you look at JD, right, here current JD. This is JD. Current price is about $59 today. Pre-market is about $60. It's up about one over dollars. Yeah. So don't immediately jump into trades. Let it cool down a bit. Because $1 increase is actually quite a lot. Let it cool down a bit because we are actually entering into a long position. We do not also want to actually pay too much for it. Yeah. Yeah, liquidity, you can see liquidity. I hope you can see my mouse, right? Let me see if you can see my mouse. Yeah, very small mouse there. Okay, so on the right side, you can actually see the info. You can look at the chart, then you can see liquidity is actually quite high, 3 stars, and the IV is actually 68%, which is quite high. Of course, it's high because for 1 month, 1.5 months or 2 months, it has actually increased by almost 100%. So that's why the IV is 68%. Yeah. So that's what the indicator is, right? The change in the price, right? And IV rank is 36, which is also quite high. And of course, this kind of high IVs is also good to do credit trades. Yeah, which also forms a part of our strategy today. Okay. So I have 5 more minutes. Okay, let's jump into the trade. Okay, so if you look at this, these are the expiry dates. And then, like I said, because we wanted to actually give more time for the trade to mature, right? To mature and to also take less risk on the decay, the slower decay. Then we actually need to increase the length, because the shorter the time expiry date, right, the faster the option price will decay, because we are actually going to buy a call. We're going to buy a call. And of course, when you buy a call, time works against us if the price don't move immediately to the direction which we want, which is for the price to actually go up. Yeah. And to mitigate that, you need to actually take a longer timeline. But of course, the downside is the longer timeline you take, the higher price you should need to pay. For example, March is 101 days, right? For a 60 call, which is at the money, you need to pay 785. Yeah, you need to pay 785 here, 785. And of course, if you look at just doing a 30 days, you only need to pay 440. So for 440, you are paying an extra about $3 to buy another 60 days of time, just 60 days of time. So that is actually the extrinsic value which you are actually paying. Yeah, extrinsic value, which is the value of time. Yeah. So okay, buy a call at 60, which is the at the money. Buy a call at 60. You pay 785 here. And of course, if you just buy a pure call, you need it to go up more than 60 to actually make the profit. Yeah. So if you look at the risk profile, yeah, so this is your risk profile. Price goes up, you make money. Price go down, you will lose money. And of course, the max you will lose is that 785, which you have actually paid. So to me, 785 to go $785 to actually go into a trade is actually quite risky, especially calls, because calls are very expensive. Okay. And of course, to reduce the how to say, to reduce the price, yeah, to reduce the price, I can also use other form of option structure to reduce the price. Yeah. But recall just now I mentioned, when you actually want to get something from options, you need to give up something. Yeah, you need to actually give up something. And when we want to reduce the price, we will actually do a structure where we actually sell a put. Okay. And if you guys are familiar with options, right, when you actually sell a put, means that it is actually here a naked put. I'm talking about a naked put. Yeah. So you need to actually sell a put. And of course, when you sell a put, what you get is you get paid to actually take on the risk. Yeah, to take on the risk. Okay. So when you sell a put, for example, if you sell a put at $45, which is $15 below the current price, $15 below the current price, which is basically about 25% buffer, yeah, from the current price. You get to collect $2.12. $2.12. But of course, to collect 212, your risk is actually $4,288, because if the JD tomorrow goes down to zero, you're going to risk $4,288. So this is the price, so-called risk which you are taking to protect your positions. Like just now I said, to make it cheaper, because you're collecting 212 ma, yeah. To make the trade cheaper, you are collecting 212. Just now you buying 785. So if you sell one put at 212, you will actually only pay 555 for the trade. 555 for the trade. And of course, the curve looks similar. The price goes up, you will make profit. And of course, if the price goes down, you will actually lose a max of $5,000, compared to earlier just a single call of $785. So this is the risk which you are taking to protect, to actually so-called protect and also finance your position. Why I say protect and finance your position is that, of course, if the price don't move immediately up, so this side of the options, which of 212, right, would actually finance the time decay. Yeah, remember that it's actually time decay. And of course, the time decay, you can also see from here, extrinsic value, yeah. So that the time decay extrinsic value here, because this is at the money, so basically most of it, $7.28 is actually the extrinsic value. Yeah. So you're going to use this 212 to protect this extrinsic value. So this is actually $60. The extrinsic is 728. So in case it stays at 60 for 1 month, then basically the extrinsic value would actually go to about 388. Sorry, about 388. Yeah, 388. You can also see here, this is 30 days. So 60, 388 extrinsic value. So basically from there to there is 388, 388 minus this here. Yeah, 730. Yeah, 390, 730. So that's the difference. So this is partly financing the time decay. Uh, 3 over dollars, yeah, $3 not fully. So in order to so-called fully finance, not fully finance more, you can enter double up the position, yeah. So that means basically here you increase the quantity to two. So when you increase the quantity to two, then that means you're collecting about 424 to finance this 785. So your price, the price which you actually pay for this structure is only 340. Okay, this is cheaper than just a single 785 call, but of course the risk goes up to almost $10,000. Yeah, so this is the one which you have to be able to stomach that in case if the JD goes down to zero, then of course it's $9,000. Or if JD goes in the money below 45, then you would actually have to buy the how to say, take up the position. That means buy the share or get assigned. But of course, when we trade option, most of the time we also don't get assigned. I mean, we can actually do adjustments for credit positions, which I won't cover today. Yeah, and yeah, so that is what. But of course, the buying power is actually much lower, like only about 2,600. But you got to get ready on your account to fork out max of 10,000. Touch wood, China gets bombed or what, it gets to zero, then this is the amount which you need to actually put into your account. Yeah. So this is the trade for 340. You actually get to enter into a call which is financed from the put. And why 45? 45 is has a delta of 45 has a delta of 15, meaning that 85% JD price within 100 days won't go down to $45. So you have a 85% chance, yeah, that it won't go down to $45. So you have a 85% chance to use this $4 to protect your call here, and to also buy time for JD price to actually move up. Yeah. So this is the trade setup. Of course, there are many other variants where you can use. If you do not want to finance so much, you can also use a spread down here. That means if you want to reduce your buying power, right? You can always use a spread to do this transaction, but this value would actually go higher, more expensive. So if you actually do a spread, you sell put here, you do a spread, you buy here. Two positions, right? Two positions. Oops, not four. Two positions. Yeah, then of course you pay 595, but your max loss from about $9,000 now, it reduces to about $1,600. Your buying power about $2,500, it reduces to about $1,600. Yeah, so that is another version where you can actually use to do it. But mainly because of the strong the strong momentum on the China side, and the possibility of the lockdown coming to an end, right? Coming to an end or easing, then of course the risk for it to actually go very much down is lesser. That's why we can actually take much higher risk for the trade by entering into these naked positions, 2 times the naked positions. Yeah, so this is also a ratio, basically also a ratio. Yeah, two sell puts, naked puts, plus 1 call. Yeah, if you just do a single call, then of course you would need to bear with the decay value in case it don't go up. But here you get to protect it of about $4, which is basically giving you about I would say about some time lah. I mean, it will decay about $3 over in 1 month. But of course, the value of this 212 would not decay to zero in 1 month's time. Yeah, in 1 month's time. Yeah. Okay, so this is the trade, the risk profile. Did I show you just now? This is the risk profile. And this is the risk profile. Yeah, you can see that this part have actually reduced significantly here. It give you a longer time all the way to 45. And of course, anything going above the price we should pay about 340, right? That means if it adds on three over dollars, then it will actually start to make profit. This is a break-even position. Immediately your anything above 60, you will already start to make profit on this orange line. Okay, so this is the trade. Of course, you can structure this out on any stocks, but I would prefer to choose stocks which are below $100, mainly because of the high buying power and also the high risk on the naked put side. Yep. So do anything 50 would anything about below 100 would be good if you have your account size is at least 10 or $20,000 is fine, but you can only enter into one position, one position or two positions. Yeah. All right. So over time. Okay. So this is the thing which we wanted to share. I hope that you can get a good learning and make good use of it to see how you can actually take on some potential positions in the market using such kind of option strategy. Okay, so until next week, hope you guys have a good trading week. I will see you again. In case there's any questions, do drop a note to me. And by all means, I would appreciate you guys to share and like the show so that more people can actually benefit from our trading stock. Okay, see you next week. Bye bye.